All righty. Good morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session and happy Tuesday to you. So we've had a little bit of activity overnight. I think a lot of this is, I think first and foremost, we've really, sorry. Just as it's funny. I sat here for the last hour, didn't yawn one bit. I started speaking and then I yawn. It's so interesting. I think a lot of this move that we've seen the last couple of days has spawned from the move that we've seen in like Bitcoin. Bitcoin dropping below the 55,000 mark yesterday, or this trend line really got the market moving a little bit. But I'm gonna make a couple adjustments here. Okay, so if we take this trend line, we go to the lows, right? Now we're going to grab it and go across the previous lows here. You notice that support comes in at today's low. So that in essence makes it, let me go ahead. That makes it vitally important today, I say today, but I'm just going to say moving forward, that the 52,000, where'd my bias chart go? I thought I had it up. Hold on. Here we go. Sorry, guys. I thought I had this already ready to go. For some reason, it wasn't. What that means is today, you guys already knew 52,500 is key, but that is absolutely critical to Bitcoin staying bullish. Okay. Take a quick look at it. Ethereum, though. Ethereum also broke the 1700 level, and we came back, bounced back. We're basically probing, resistance now. And I do think that the crypto space is going to continue to lead this market. So you notice how overnight the market queued off of the crypto move. It was the crypto market that moved first. Everything else moved after that, right? Because the crypto move that we saw started taking place actually as Asia was just coming in. So something to pay attention to. Okay. Now, everything else you notice that equities, they just continue to hold up pretty well. I wanted to point this chart out that I was talking about in the chat room. This is the NASDAQ. Excuse me. Drinking coffee, trying to chug coffee. Let me delete this. And let's draw this. So I think that we might be in a triangle formation. So let's put a alarm here and an alarm here. Then this is the NASDAQ 100. And let's let it guide us out of this wedge. All right, so let's go through the rest of the markets. Well, actually, since we're here, let's go take a look at the S&P. So the S&P, if you don't recall from yesterday, for those of you in the chat room, you probably knew this. You definitely knew this. And you know what? You can get the updates with ForexAnalytix too, because I remember I updated the S&P about this yesterday. So if you look at the 4-hour chart, S&P struggling with the 618 retracement at 39.50. And, again, this is yesterday intraday analysis. The S&P is at the 4-hour 618 retracement, which may offer resistance for the market. It's been a short squeeze today, which is typical of a Monday. So we squeezed. We hit the 618. right? And then we came down. So hopefully, some of you guys weren't long risk when, after that happened, you were able to pull it off. But I think that today that's going to be pretty significant resistance. Now, obviously, the 4,000 level is going to be key resistance. But for today, I'm going to say 39.55. So, oh, shoot. I need to put this down. Sorry. 39.55 and then 3,900, which is this low here. I know we had a spike low here, but let's call it 3,900. That's key for today. Remember, I came out of the bullish trend because of the false breakout. Okay, because of the false breakout above 4,000. I'm going to keep it in the, just like a neutral bias for now, right? Okay. Amira said NASDAQ upside head and shoulder in 4 hour. Okay, so let me stop you for a second and let me explain to you something. I'm stretching. Oh, man. I'm not going to disagree with you, but I'm also going to beg of you not to create bad habits. Amira. So let me explain to you something. And I'm going to stop here and I got to explain this. Let me pull up a chart that doesn't have anything. Okay, just give me 1 second. Okay. You with me? Blank sheet here. I'm going to draw something for you guys. And I want you guys to think about this really quick. If you read any basic technical analysis book of just like the rules, okay? A head and shoulder pattern is called a reversal pattern. Why? Because you got in like this case, you have an uptrend. You hit a head, shoulder. That gives you a reversal, right? Everybody with me thus far? In a downtrend, you get shoulder, head. It's a reversal pattern, right? Head and shoulder patterns are reversal patterns. They're not continuation patterns. What you're pointing out in the NASDAQ is this, Amira. This is the shoulder, this is the shoulder, this is the head. And you think that the NASDAQ's going to go this way. Do you agree with me? Amira. Okay, you agree. So let me go back to the original definition of a head and shoulder pattern. A head and shoulder pattern is a reversal pattern, not a continuation pattern. This is a continuation pattern of an uptrend that you're pointing out. You with me? Do you know why it works? because we're in a very bullish market right now, which is, based on my 25 years of experience, it's freaking stupid where we're at. But it's this, massive monetary, stimulus that's put us, and Fed stimulus, fiscal and monetary stimulus has put us where we're at. And you can't stop the bum rush with the market. But this is where, you always hear, if you're a bull in a very bull market, you don't have to be good to make money. You just go long, right? So you're going to see a lot of analysts, technical analysts, call this incorrectly. But when we get into the 80% of the time, when we're in a range-bound market, what you're going to find out is that what you just pointed out is not going to work more times than not. Most times. They don't work as continuation patterns. The only reason why it works as a continuation pattern right now is because the market's been so bullish. So I'm not going to disagree with you right at this moment, just because, we are in a bullish market, but it's really bad habit, really, really, really bad habit to get into, to look at this. And I'm not coming down on you, Amira. Don't think I'm, like purposely coming down on you. I'm just not. I'm actually just making a point. I'm making a point of, I see what you're talking about. I see the inverted head and shoulder pattern, but it really is, this is more of a continuation pattern, and they're just not continuation patterns, because what you're going to find is they'll stop short more times than not, especially when you get into a range bound market. Because what happens is, let's go into the next, what I feel is probably going to be the next 3 to 5 years. In the next 3 to 5 years, if I had to guess, and I'm just going to say this, and then we got to really get to it. In the next 3 to 5 years, this is a monthly chart of the S&P. We're going to be right here. If I had to guess. Like, all the easy money's been made, like people, especially all these youngsters, Euro's hitting new lows, by the way. All these youngsters that think that, this is it, the market's, we're going to, we're going to go to wherever we're going to go. I just think that we're going to be in a range bound environment for many years. Okay. And that's when these bad habits, like, trying to use a inverted head and shoulder pattern as a continuation pattern, that's where it's going to bite you in the ass, if I had to guess. Okay. Tony said, we all needed to hear this. Thanks, Blake. Beautiful breakdown. I've heard you say it 100 times that it's not a continuation, but hadn't seen that breakdown to make it stick now. Thanks again. That's one thing about what I do. Thank you, Tony, by the way. I try to explain things multiple different ways. And that's the thing about trying to be an educator, is doing that. So if I say it in a certain manner, it does stick with you. And if you hear it a bunch of different times, it's like, oh, it finally sticks, and the bell goes off, and you hear this ding, ding, ding. That's great. That's so important to me. All right. So thank you for the feedback. Alexander said, yeah, I also want to thank you for explaining. My pleasure, Alex. My pleasure. Okay, let's go to the euro. So the euro, same deal as yesterday, but I had this drawn like this, and I think we're still in a pennant. We just have to be really careful, a break below 118.30. And that's when the, that's when you start looking, bear flag pointing to 116, which I think is ultimately where we're going, guys. It is. I'm going to reiterate, the most bullish call was euro going to 130 in 2021. And I think people from December of last year making that call are probably going, can we delete that? Is there any way we can delete that? I mean, and I'm not going to argue. It looked pretty bullish, but I knew it was consensus. It was the consensus trade, you know. 120. While we're below it, we're bearish. Okay. Cable. Now, this is the one that we have to pay really close attention to. We break 137.50, and especially if we break 137 the figure. This is where I start looking at, this is the monthly cable. I'm looking at this chart, and I want to really be like long down here. This is a monthly chart, so just giving you like a long-term view of the sterling. I actually think it's going a lot higher, but you guys have all seen the Kay and Peele substitute teacher video, right? You guys have all seen that. Is that anybody not seen it? Blake. Is this the funny? Hey, Ron. I'm sorry, I can't. Sorry, when I was thinking, when I was just looking at this, it's so funny. Okay, if you guys have, Becky hasn't seen it. Oh my gosh, I'm sorry. I have you. Hold on. YouTube. So don't watch it right now. Substitute teacher. Okay, do not watch it right now. Okay, please. Obviously, we got things we have to focus on. But if you want to laugh after the market closes, whenever you're done for the day, I'm putting the link right here in the chat box. There you go. It's all there. Okay. All right. Let's get to the business. All right. So the cable, 137.50. You guys know I've been talking about that being really key. If anybody that I meet in person says, they come up to me and they're like, hey, Balake, I start laughing my butt off, because then I know that they know exactly that video that I just posted for you guys. It's so ridiculous. It is so funny. But if you're part of the cancel culture, I'm assuming Kay and Peele will get canceled at some point, which will be the day that I become a cliff jumper, because they're just funny comedians. Anyway, 138.80. This is where, right here is where, if you're short sterling, this is where you get a little worried, because, you know, if, like, let's say this holds and you rip right past this resistance, and that means we're going back to 140, right? So just 138.75 would be important. 138.75. I am going to keep us in range while that low is holding. That low gives way, and especially 137.15, we are going bearish tomorrow, going to the dark side. But for right now, it's still bullish. Okay. Aussie, big head and shoulder pattern developing, guys. I mean, there's no if and or buts about this. That means that if we break 76.20, yikes. And I'm going to just be brutally frank with you guys regarding the Aussie. I really want it to just get destroyed. I want it to go from, 76.20 down to 72 cents, and I'm going to buy the crap out of it in a couple of weeks, or wherever it points to. I mean, it points to 72 cents. I'm going to buy the living crap out of it down there, but I want it to just get destroyed and scare the crap out of everybody. That's what I would love to happen. Because remember, everybody's long copper, everybody's long Aussie dollars, everybody's long Canadian dollars, everybody's long euros, everybody's long sterling, everybody's long Kiwi. I want them all destroyed. Destroyed. Okay. I don't know if I'm going to get that, but any rally back to 77 cents, probably going to find resistance now. Kiwi is in breakdown territory. Resistance is at 71 cents. I don't even have to look at the chart. Support's at 70 cents. We're going to look at the chart. I'm just saying. It's a bear flag. Now, and it, like imagine like at this point, you're long. And this happened. You're like, oh my God, I need out, right? So you know that you get back here and you're and you get back to, you know, previous support here, previous support there, previous support there. You get back to 71 cents and you know, you're going to be like, dude, get me the hell out. I cannot believe I missed my exit last night, you know? So 50% retracement comes in this spike low here. You can see that right there. That comes in at 69.90. So let's write that down. We are bearish well below 71 cents. Dollar Canadian. You guys already know this. 126 is major. I already booked some profits this morning. If you guys are, this is where we flipped to bullish. I'm going to put us in range today. I think I had us in bearish, I think, but we're going to flip to bullish today if we can get a daily close above 126. I've pulled some profits out of the dollar Canadian. I'm still long 3/4 of my position, but I took some of it off just above here at 125.80 this morning. When I was in the chat room, we were up here. I think you got to look to buy dips back towards somewhere around here. You know, you can say probably somewhere around here. 125.40. It's not great support, but I'm going to write it down, okay? Because I think that dips are just so well supported right now that you want to, if we can get a dip down there, that's kind of where you want to be on the long side. If you've missed this, like if you've missed this move and you're like, you know, damn it, I'm, you know, it keeps missing all of my, you know, bids. Well, it looked like, to me, it looks like we're about ready to just slingshot higher. When I say slingshot, you know, this is the false breakdown slingshot, you know, like you get everybody short and then, you know, you know, rip past this resistance and, you know, go to 129. Slingshot, right? So I think that's what is happening over the next few weeks. So if you've missed it, you know, you got to try to, you know, get on the long side somewhere. Like, you know, that is my assumption where you want to be long, somewhere down here, 124.40, 124.50, before an eventual move above 126. Okay. All right. Swissy. 92, 93.25. We're at 93.25, right? So let's see. That's obviously key. It is bullish. Dollar yen is bullish, but we've come down. $108.30, right? $109.30. I think we've been writing this down every day. What's today's low? 108.40. You know, index. Man, this dollar index is getting close to really just screwing everybody. The short dollars, I should say. 91.70 is support, 92.50 is resistance. That's key. I'm going to write down 91.60. It's this right here, right? That's got to hold really for the bulls, I think. Dollar peso. Dollar Mexican peso has kind of been lagging, and you know when we're lagging here, that it's more of a you know, I think it's a testament to how strong stocks are. You know, stocks are holding up. They're holding up well. So resistance right now, let's figure this out because I'm long and I want to know where I need to be adding. So you notice here, okay, you notice this fib I'm drawing, right? 38% retracement comes right around these spike highs. So that means that this 2084 is big. It's a 38% retracement. It's key. I think if we can get above that 38% retracement, then the chances of us making it back towards the upper end of this channel, you know, towards like 22, I think is good. Okay. Intraday, if we get a drop down to 2040, this is the best risk reward to be long. You know, and I'm a little irritated about that because I knew that when we were sitting here yesterday, was it yesterday? No, on Friday, we were sitting down here before, you know, it was Friday. Now that I'm thinking about it, we were sitting down here at 20, 30, whatever. And I'm like, I didn't add it. I didn't add to my longs. Because if you were with me last week, I sold some of them. I held a core position. We were sitting here on trendline support, on channel support, and I was like, man, this is the best risk reward to be long right now, right here, right now. And you know, it's like I have exposure, and I'm like, I just didn't want to add to my exposure, but I should have been. And you know, I think if you get that opportunity, you have to take it. I didn't. So if you get a dip back down to 2040 because stocks are rallying back, then I think that's how you play it. Dow is stronger today. NASDAQ is weaker. So that must mean yields are bouncing a little bit, I think. They are bouncing a little bit off of their lows. Okay. All right, back to the charts. US dollar, Norwegian krona, same thing here. Big triangle developing. I am going to be concerned with 862 support. It's pretty strong here at 847. Somebody asked me yesterday, who might be listening in right now, because it was during the daily roundup. Is this still a Wyckoff pattern? Yeah, because this false breakdown here was the here. Let me show you. I have the picture saved, so let me go find it for you really quick. Where is it? Finding it. Here it is. Okay. This is the low volume sell-off right here. See where it says test and that, you know, the asterisk, that was this right here. we're currently somewhere around here, I think. Okay, which means that we should be the next move should be higher from here. It should be the breakout above, should be. But then again, we're kind of developing a triangle here. If it goes by Wyckoff rules, it should look like this. This is what the next 2 weeks should look like. That's what the next 2 or 3 weeks should look like. Right? Okay. So, but for right now, it's not. I'm waiting patiently for this breakout. Once this is one of the trades for me that I'm going to be very aggressive with, just so you guys know. All right. Meaning this one's probably going to be double or triple my normal position size when we see a breakout like this. Because once we get a breakout, and we make that move to, I'm just using 880 or whatever here. I'm already long. I'll probably add a little bit, but it's when we dip here, and if we find support at 865, 870, somewhere around there, this is where I'm going to be pretty aggressive right here. Okay. Alexander said Wyckoff is priceless. Looks like Wyckoff. I don't know why should we cough? Just kidding. Okay. Continuing on. Steve and Stelios are probably like, shut up, Blake. We just want to just say whatever we need to say and be done with this. How you guys doing?
We're okay. How are you?
I'm doing all right. We got sidetracked on talking about the inverted head and shoulder pattern as a continuation pattern. It's really lazy analysis by a lot of analysts that keep pointing it out because
Stelios, sorry, I was muted.
Stelios, you've been around long enough. You've seen the markets go sideways for a long time, and when they go sideways, that's how you get trapped. Is you develop all these poor analysis habits, and then you try to apply them in a real market environment when you're going sideways, and you're just going to get your butt whipped a lot, and you're going to wonder what happened. So I'm going to keep this. Steve, were you talking and on mute?
Yeah, just when you said hi, guys, for like 5 seconds.
That sucks. So I don't think anything's really changed here, and let's just take a look at silver. Silver is getting close to 2480. Remember, it's 2680, 2480, same numbers as. I don't want to go bearish yet on silver at this moment, although I do think the risk is lower. But I'm going to keep it on range. So this is the bias chart, and Steve, going back to our conversation about that we were talking about on the FA.C.E webinar earlier regarding the Fed governors, I do think it's really important that we start to take cues from Fed governors and what they're saying, because Jay Powell, I think he's a very big product of not only Janet Yellen but also Ben Bernanke as well, and dealing with financial crisis is in today's Fed. And I think he's learned a lot. He's learned that you just throw everything plus the kitchen sink at the market when something bad happens, like he did, because that's what Bernanke did, and that's what Yellen continued doing that. What he also, I think, learned, and this is what makes him different than the Greenspan era of like earlier in my career, is that they will telegraph everything way ahead of time. Unless it's a crisis situation, which obviously did when they had to deal with the COVID lockdown. They will telegraph everything. And we're not in a crisis situation. We're far from it. So The only thing that we might be dealing with in the future is maybe a couple spikes of inflation, but they're obviously clearly conveying that they have the tools to deal with it, even if we get a spike up in inflation, yet they don't see it even remotely on their radar. So if they are like, okay, we're starting to feel some pressure from the market, we're starting to see, an upward trend in yields, and the market's trying to force our hand into, being more hawkish, they'll put out people like Kaplan today and have them say the things that they want to say, because they will slowly get the message out. And so that's why I think it's important that we start paying attention to what these Fed governors are saying.
Yeah, I don't disagree with you on that part. I do have my doubts about the rest, meaning how much the Fed knows what they're doing. I mean, they know what they're doing. I mean, they're smart people. They're well educated. As I've said before, there are two explanations with the Fed's members. If you listen to them, they're either completely clueless and stupid, which I don't think is the case, or they're just lying because they have no alternative, because they've cornered themselves during the past like 13 years in a specific path that is very hard to turn away from. Because it is very hard to turn away from, because it's going to be extremely painful and nobody wants to take the blame for it. So do I believe that they've handled the economy right? I believe they handled the economy in the worst possible way, because in essence what they've done is that they've helped replace a normal economy with a phony economy. As I've explained multiple times before, every single person on the planet is willing and can consume as much as possible. If healthy economy was having people that are willing to consume based mostly on credit, then every single economy could be healthy starting tomorrow, as long as you provided enough credit for people to consume.
Yeah, well, can they keep the charades game going? And they've done it for a long time, and I mean,
it's the same premise as bubbles, because in essence what they're doing is they're sedating the economy by creating bubbles, which means oppositely from what they claim, that all the Fed governors have always claimed it's impossible to distinguish a bubble before it actually pops, which is of course BS. Everybody can understand when something is a bubble, as long as you've seen bubbles before. What is incredibly hard to predict is when a bubble is going to pop. Exactly the same thing with, can they keep this going? The answer is yes, they can keep this going, not indefinitely. When will the party stop? That's the problem. Nobody can predict, because it will always be a matter of coincidence as well. You know what I mean?
Yeah,
something bad happening at the wrong timing.
Yeah, but since we can't,
we can't.
Theoretically, this could go on past the point of me being buried 6 feet under.
No, that I doubt it. Okay. If you mean that if this can keep going for like 20, 30 years, 40 years, I mean, no. I mean,
let's agree to disagree, and let's make sure we start talking about charts and what we see here versus what we feel and what we think. Personally, I think that the dollar looks like it's, at risk of breaking higher. And I think that we have to be watching, these cryptocurrencies. I mentioned it on the F.A.C.E webinar, but I want to be, as clear as I hope I was there. I think that the cryptocurrencies are regarded as the riskiest investments out there, and the risk, and it's from a more of an attitude standpoint. And if they really start to break down, that's going to weigh on risk appetite, generally speaking. So that, I think, is really
or the opposite. If risk appetite starts getting affected by what's happening in the dollar, I think it will drag with it. I mean, if indices turn lower, I think they will drag with them cryptos. And probably, as always, cryptos are also going to respond as a higher beta, perhaps even to the Nasdaq.
Yeah, and that could be true. So, but hey, I'm gonna pass it over to you guys, and the reason why I have to is because my dog is actually outside of my office door growling,
Scratching the door.
to eat. Yeah, no, the big one is actually she's not growling, but she makes funky noises like she's a cow. She like makes cow noises. She sits outside of my office door, and you hear this. It's like, okay, I gotta all right, guys. Stelios, you guys enjoy. Guys and gals, I'll catch you in the chat room. And,
okay, mate. Bye-bye.
Thanks, bro.
Hey,
That's interesting. That's interesting. So yeah, let's see how long they can keep this thing going.
I think in our lifetime we'll experience some very, very interesting developments.
Yeah, we should do. We have some numbers, new home sales in 2 minutes, but
I doubt it's going to move the needle. Yeah, new home sales 0.87 expected. Previous was 0.92. That's in millions, of course.
Yeah.
The changes is expected to be strongly negative, actually, minus 6.5% month on month. Without being in this market stage or knowing the ins and outs of the market, my initial assumption would be that a rate increase in conjunction with the huge price increase in materials for house building should weigh on the market of houses.
Yeah, and just think about how many people have refinanced with the rates this low, or or rush to buy because they can get a good mortgage, etc. It's yeah. Let's see. Yeah, what else to say? I mean, today, interestingly, yields are down, and the risk is only slightly down. So,
exactly. For me, it's once again surprising. First of all, I keep monitoring as a key chart. You remember we were talking about it since a couple of weeks ago. This potential of an ascending wedge here in the 10-year. So I think this is going to be a crucial chart for the market. But I find it very, very interesting that the correlation between yields and the stock markets had changed to positive once again, as it used to be almost always in the past. And during the past couple of days that we've, in essence, had yields moving lower, the stock markets are looking the other way.
I mean, it's only one day, but
of course, it's too early to say. Yes,
the day is way too early.
Yeah, I don't disagree with you.
But it seems that the one thing that people still don't like is metals, and I really, really hope we get a bit of a continuation lower, so that I can start buying quite a bit more. But for the moment, silver is down almost 2%. 24, I think we'll see 24, and they're gonna.
Gold and silver both got rejected from big resistances, big having to do with the importance. So the path of list. By the way, we just got numbers. New home sales 0.77 versus 0.87. So in essence, 100,000 less than expected, and the month on month minus 18.2%. And the previous one revised lower as well. So bad numbers in new home sales. I mean, really bad. 20% lower month on month, almost. I mean, I haven't had a look at the series.
Some kind of
I haven't had a look at the series, but something tells me that that's a pretty nasty number here.
Yep.
Yes. So gold and silver, the path of least resistance in the short term after the rejections from like the 1750 area and the 2630 area is lower. So I'm also crossing my fingers to have the opportunity to buy cheaper. I mean, I would love to see gold even below 1700 if possible. I would also love to see silver near 22, and if extremely lucky, even lower than 22. But I very, very, very much doubt that even if we get these numbers, they can last for much. Now, crude oil turning, very negative once again. And as I was saying yesterday, I think we break through this 50 daily moving average that we're currently testing. I think we're on our way to 54 next, and even lower. It looks to me that crude oil has more or less broken down, especially if today is another negative day. I think it will decisively break down. At the same time, of course, the DXY is making another attempt to break higher from this triangle, which will definitely point to another extension higher towards like 94.50, the 38.2% FIB, and it looks like a very, very likely scenario. I mean, the structure, seems nice. The big mover, of course, has been the Kiwi. Kiwi, a textbook bear flag. After this move lower, we had a 3-wave move higher, and we seem to be going in some type of an impulsive continuation lower, which has also caused the Aussie Kiwi to break through a key trend line resistance, and it looks like it will move a lot higher, and at the same time it's causing the Kiwi yen to break through an ascending wedge, and in quite a decisive manner. So it looks to me like I mean, if this is indeed an ascending wedge, the Kiwi yen could potentially retrace the full extent of it. I mean, all the way back to 69. And for those of you that have been in the markets for long period of time, there was a period of time that pairs like the Kiwi yen could make moves like going from like 79 to 69 in a matter of a week, right? 10 days or whatever. Now, a little update here. USD NOK, despite the strong move lower in crude, and the dollar being decently bid, has not broken out from 865 yet. So I haven't really made a move there. And the same thing applies to USD CAD. USD CAD earlier today tested once again this channel trendline resistance, hasn't broken out yet, right? Of course, the Kiwi might just be the first mover. So there is a decent chance that every other commodity currency might follow in its path, and might start breaking higher against the dollar. So let's see if the overnight volatility can actually resume. The cable actually and the Kiwi are the weakest one from the major currencies. Cable, in my opinion, probably has broken down from this symmetrical triangle also, which would point.
Steve, we lost sound. Steve, can you hear us? No, we have lost Steve's sound. I told him, and I think he's looking into it now. He's not muted. Let's see if he can bring it back.
Okay.
Yes, we can hear you now. We can hear you.
Yeah, battery over. Had to switch battery. Sorry.
Okay.
Where did the battery die? What was I saying?
On the previous chart, basically, you were on the previous chart.
Which chart was that, Celia? Sorry, because I kept speaking.
I can't actually remember because you minimized now. Which one was it? Good question. Anyway, okay, let's.
Okay, I was saying that the euro isn't the biggest mover, and in my opinion, if the dollar breaks higher, and we get at the same time some risk of conditions, the euro should not be your preferred choice as being a short against the dollar. In my opinion, other currencies like the Kiwi that has already broken down, or some of the commodity currencies, might lead the way lower in the dollar's rebound. So that's what I was saying. Now, let me go through some of your questions and see. Headset lost battery, yes, but this headset comes with 2 batteries, so it was very easy to fix. So let's see. Nasdaq upside had cup and handle. I'm assuming you mean. So you're seeing a cup and handle on Nasdaq. Let's go on the 4-hour chart and have a look at it. Yeah, it can end up being some kind of a cup and handle. This one, I'm assuming you're talking about. Yeah, we would still need to cross over like 13,000, like 270. But the thing is that cup and handle formations are continuation formations and not like reversal formations, because if this is the cup and handle you're talking about, that would make it a reversal pattern, because the lows of the cap are the lows of the corrective move lower. So that's a little bit of a problem with this type of interpretation. But even if you look at it on the daily, there is a good chance that the Nasdaq can continue higher because the move lower was corrective in nature, right? I mean, nothing impulsive with this move. So just by purely looking at the chart, here's the S&P, sorry, and here's the, wait, here's the Nasdaq on the daily. Here's the corrective channel lower, right? I mean, as long as we trade above it, yeah, I mean, we can continue higher. So yeah, I mean, the hypothesis that if we continue having dollar strength, indices should turn lower is just a hypothesis, because we see how artificially big these markets are, and correlation between yields and the market conveniently switches in favor of keeping the market bid. So yeah, that's why I would be very, very, very skeptical about shorting this market. I mean, it's due for a pullback, unquestionably, but being due for a pullback is has not proved to be enough in this case. Stelio, by the way, I don't know if you still have your short here in euro yen. Euro yen, already completely retraced yesterday's big move higher. So I think this opens the door for a move towards the biggest formations trend line support, roughly at 127.40. I'm assuming a lot of people might have also been, skeptical about this move following yesterday's bullish engulfing candlestick. Following in the weekend, we opened with a gap lower. Not only we actually filled the gap, but we engulfed Friday's candlestick. So I'm assuming a lot of people might have thought this was like a false move lower, but after what we're seeing so far in the day-to-day, it doesn't look like that's the case. The main reason, of course, being both a move in the euro and the fact that the USD yen has been somewhat under pressure. Although I have to admit that so far this move in USD yen looks more like a consolidation. Now, what kind of a form of a consolidation? No idea. It can be a flag, right? One interpretation. It can even be a symmetrical triangle, second interpretation. We'll have to wait and find out what the case is, right? So far, though,
I moved my stops to break even in euro.
Yeah. I think it's not a bad idea.
We're going,
yeah. I think it's not a bad idea. Especially if we see, as I said since last week, if we see the 10-year yield breaking through the ascending wedge, I think then USD yen will inevitably have to tank lower, and that should help, the pair accelerate to the downside, most likely than not. Now, we were talking yesterday about the possibility of a break higher in euro pound. Just revisiting this chart. Euro pound closed the day yesterday exactly on resistance. Today it was pushing higher on the day, but as you see, it has already completely retraced the gains, right? So, don't jump the gun here because we still have not had a daily close above the channel trend line resistance. So we might be breaking higher, but we have absolutely no confirmation yet. What has happened though, that is significant, and I was writing about it, in the weekend, is that what looked like a corrective move of the corrective rebound in euros seems to be breaking higher. That would imply one more leg to the upside, which makes sense because you usually want to see at least two legs higher, right? So I would assume that we might extend towards the 38.2. And more prominently, look at this move in Euro Kiwi. Huh? Quite a massive move, mostly due to the Kiwi, of course. Breaking through this trend line resistance, quite an interesting breakout. Next upside target at 170.50. Short term, that's quite a nice bullish development. I think most likely this is going to prove to be a corrective move, but keep in mind that even corrective moves in crosses like that can move a long way in a very short period of time, right? Because they're very, very volatile. So, I mean, it can prove to be a corrective move, but a corrective move can easily prove to be 400-500 pips within just a few days. So, I mean, there is money to be made even trading them counter trend. Let me go through some of your questions. Dow Jones, DAX, and Platinum. Sure. So, Dow. Here is the Dow. Remains very, very, very well bid, right? Very close to the all-time highs. Nice reversal last week with that shooting star that first posted an all-time high, then reversed lower, and that has marked the top so far after a little overthrow from this channel. But so far the move lower is orderly, right? First support would be at 32,000. Keep that in mind. Now, having to do with the DAX, more or less like the Dow, and I've talked about how well correlated these two indices are. Even closer to the all-time highs. This is a significant area of resistance, not just because we turned lower from it like last week, but because it's the 161.8% extension of this corrective move lower. So, let's see. For the time being, undoubtedly, it remains one of the most bullish indices from the main bourses. So keep that in mind. I mean, the relative strength it displays should at least warn you that if you want to be short an index, probably that's not the DAX you should be selecting, right? Having to do with platinum, that was the last thing you asked for, mate. Here it is. Still within this, in my opinion, corrective channel. So, nothing has really changed. When we break above this channel, I think it's going to be a bullish development. Until that happens, there is even room for a lower low before we actually can continue higher, right? Steve, you think FX volatility will come back this year? I think it's likely, but as always, I think this is very much, unfortunately, connected to what's going to happen with equity volatility. So I think that's going to be the case. I don't know for how long that's going to be the case. We'll have to find out. I definitely hope so. IQ, what is that? Is that a company sticker? IQ, let's see what this is. Oh yeah, we had another look at it the other day. Obviously, you asked for it. Yeah, and I was talking about the importance of this resistance area, right? Now, pay attention that within this resistance area, we also have potentially a nice 3-drive formation as well. So I would be very, very careful at these levels. Very careful. Let me see. Steve, also has ForexAnalytix consider offering a middle pricing tier again for people that want to access the pattern in place but can't be in the chat room because of a day job. Yeah, that's an interesting topic of conversation. I promise we'll discuss it. Yeah, I promise we'll discuss this. My pleasure, Jason. Okay, just confirming that I've covered everything. Any last questions, guys or girls? Before we call it a AEA and GDX. Oh yeah, GDX. Yeah, not a bad idea to have a look at it. So, as you understand, GDX is going to be affected by what's happening in the price of gold, right? What I'm mostly focusing on is that it remains in what is clearly, in my eyes, a corrective channel. So I can't tell you if it has bottomed out. It might. I can tell you, though, that I 100% consider this move a corrective one. Not impossible to see a lower low within the context of this channel. And the only way to say, it's the correction is over is if we see another leg higher that's going to have impulsive characteristics and break through the channel's resistance. But I can tell you that if you're looking for value here and if you're looking to buy and hold, I think, you can start doing that, little by little. That's what I think. Our pleasure, Irina. Okay, so we cover AA and AussieCAD. Okay, since somebody's asking about AussieCAD and Kiwi moved quite a lot, we might as well have a look at KiwiCAD as well. So let's have a look at AussieCAD, which I haven't done for quite some time, and KiwiCAD as well. So last time we had a look at AussieCAD, as it seems we were here, and I said I expect one more leg lower before higher. We got that leg lower, but despite getting that leg lower, we seem to be consolidating once again in what doesn't look like a bottoming pattern. So let's delete all the previous drawings and try to find out what's happening here. Probably a deeper correction has to unfold here. Let's flip this. So let's see. Yeah, currently testing the 50% fee previous high as well. It looks very heavy. Next target 95.33. I think it should continue moving lower. And we need more evidence to decide what type of structure it's building. Now clearly KiwiCAD is going to be looking a lot worse. Yeah, last time we had a look at it, I said that we break through this triangle, we go lower, because don't forget what I mentioned back then is that the triangle had already fulfilled its minimum expectations. What are the minimum expectations of a triangle? A higher high. We did that, right? We broke through the triangle, clearly produced a higher high, and then we collapsed back in the triangle, first warning shot, and then we broke down from the previous triangle's trendline support, second warning shot. So you see how it looks really bad. It looks really, 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 really bad, right? Really bad. I would be very, very careful here. I think we can easily find ourselves back to 86.30, that previous low. So I think that both of them look, very heavy, especially, of course, KiwiCAD even worse. clearly, now that Aussie Kiwi is breaking higher as well, if you have to select one of them to be short, that should be the Kiwi CAD, clearly underperforming. Now, let's also have a look at AA. Yeah, last time we had a look at it, I said that it might produce some kind of a consolidation, right? And it has started, forming a little bit more now. We'll have to find out, what this is. Very little price action so far, right? But I think that whatever move lower we get, it's going to be corrective, and we will eventually continue higher towards 40. So keep that in mind. So, but we need more price action for me to, start deciphering what kind of a corrective structure we have. So no idea yet, but I think the move lower is going to prove to be corrective, most likely than not. So give it some time to unfold, and then we can discuss more about it. I think Alcoa will eventually break higher once again and move towards 40. Okay, so see you all later. Enjoy the rest of the day, and
thank you, Steve.
let's
Very
hope volatility
comprehensive.
continues.
Thank you, Steve.
Thank you, Stel. Thank you, everybody.
Thanks, everybody.
Bye-bye.
Bye-bye.